Good afternoon, everyone. This is Stuart. We hope you all had a great 4th of July weekend. In today's brief update, we'll discuss a positive AI development for Apple and a key investment provision from the recently passed tax and spending bill. To start, last week, Bloomberg broke a story that Apple plans to integrate large language models from OpenAI or Anthropic into Siri, which marks a strategic turning point with potentially material implications for the company and its investors. In the short term, it's a clear win. If Apple integrates a leading model into Siri, it no longer risks falling behind in the AI race where ChatGPT and Google Gemini are quickly raising user expectations. Additionally, this move takes the existential threat off the table that Apple users might migrate out of its ecosystem just to access better AI. That's a key reason the stock has been under pressure this year and then rallied on the news last week. Investors saw Apple move to protect its platform stickiness. By tapping into best-in-class models externally, Apple can offer competitive AI capabilities as soon as next year without needing to build a frontier model from scratch. By leveraging partners to fill the gap, Apple can focus on what it does best: device production and the integration of software and hardware. But from a longer-term strategic view, there are real risks to this strategy. Outsourcing the core intelligence of Siri means Apple becomes dependent on external providers for a foundational layer of user interaction. That could introduce cost pressures, reduce control over privacy and customization, and weaken Apple's ability to differentiate as AI becomes central to the user experience. So, while we think this is a smart hedge that buys Apple time and keeps users loyal, investors will need to watch whether Apple ultimately brings its AI layer back in-house. If not, the company will still be in better shape than having an inferior AI experience, but we would expect a long-term hit to margins. In our view, the trade-off is worth it, but we would like to see Apple redouble its internal AI efforts over the coming years. Turning gears now to the policy front, under the recently passed Big Beautiful Bill, businesses now have gained two powerful tax tools: 100% bonus depreciation and full expensing of domestic research and development costs, both of which significantly reduce taxable income and improve cash flows. Bonus depreciation allows companies to immediately deduct the full cost of qualifying capital assets like machinery, vehicles, equipment, and certain property in the year the asset is placed in service. This eliminates the need to depreciate over multiple years, lowering tax bills in the short term and boosting cash flows and liquidity. It's a major incentive for companies to invest now, especially in capital-heavy industries. At the same time, the bill restores full expensing of US-based research and development costs, reversing prior rules that required amortization of those costs over 5 years. Now, businesses can deduct all of their domestic R&D expenses up front, encouraging innovation, especially in tech, manufacturing, and the life sciences. Importantly, these provisions are not short-lived. The 100% bonus depreciation is locked in through at least 2029, with phased options available into 2030, and R&D expensing is made permanent for domestic activities. That gives businesses the long-term planning certainty that they've been craving. Together, these changes simplify tax compliance and may propel domestic investment, making the U.S. an even more attractive place to build, invest, and grow. From an investor standpoint, this is especially constructive for companies in manufacturing, logistics, data centers, construction, energy, and heavy industry, sectors that rely on large capital investments up front. These firms can now fully deduct the cost of those investments in year one, improving their near-term earnings and cash flows. As always, please let us know if you have any questions about today's discussion or if you'd like to discuss your portfolio or markets more generally. Thank you and have a great start to your week.